Hey guys, in this video, I'm going to share the exact trading strategy that I used to get my $6,000 payout from FundedNext. It's the same strategy that I still use to get funded across multiple prop firms and secure payouts. And the best thing is, it's not complicated, it's actually pretty simple. I'll walk you through my strategy in 6 simple steps, the same process that I use for every challenge. If you've been struggling to stay consistent or get funded, stick around to the end because by the end of the video, I think this is going to help you a lot. If you're new here, I'm a full-time trader and I've been trading with these online prop firms for about 5 years now. I've had multiple 6-figure payouts and I started this channel to share my journey and help others avoid the same mistakes that I made along the way. So I was actually going through my old accounts recently, reviewing and journaling my trades, and I came across this FundedNext Payout from earlier in the year. I thought it'd make a great case study to show exactly how I traded this account and what I did step by step to reach that payout. So here's my payout certificate. This was from a 100K 2-step challenge account, which means that there are 2 phases to pass. You have a phase 1 and a phase 2. And then you get your funded account. It was an 80% profit split and took about 1 day for the payout to hit my Rise account. And just quickly, I mainly trade Forex, but you can apply this strategy to pretty much any market. So crypto, futures, shares, the principles are all the same. So step 1 is identify trending markets. So every morning I start by scanning all the charts, mostly on the 1-hour time frame, to look for trending pairs. And just to explain quickly, a trending pair is basically a market that's making higher highs or higher lows if it's in an uptrend, or lower lows and lower highs if it's in a downtrend. So that's how you know that the market is actually trending and not just moving sideways. If the structure isn't clear, meaning the market is choppy or rangy or messy, I just skip it. Clean market structure means easier decision making and cleaner risk. So when a market trends, you'll notice that it moves in a series of pushes and retracements. The push is a strong impulsive move in the direction of the trend, and the retracement is a pullback before the next leg. So you never want to enter during a push because that's when price is already extended and the risk is higher. Instead, I usually wait for a retracement because that's where you can get cleaner setups, tighter stops, and better risk to reward. So step 2 is align timeframes. Once I find a trending pair, I'll check whether the higher timeframes like the 4-hour and daily are aligned in the same direction. This is what we call multi-timeframe analysis. And it's just a fancy way of saying that you don't just rely on one timeframe, you want multiple timeframes telling the same story. That gives your trade a better chance of working out because you've got the bigger picture on your side. Think of it like using a GPS. The 1-hour chart shows the street that you're driving on, but the 4-hour and daily charts show the entire map. If you only look at the street view, you might think that you're heading the right way, but zooming out lets you see where the road actually leads. On higher timeframes, I might check the RSI levels to make sure that I'm not overbought or oversold. I might also mark key zones above and below price and make sure that I'm not trading straight into a major support or resistance area. If the higher timeframes aren't aligned and is telling the opposite story, then I'll skip the trade. So step 3 is to assess the trend maturity. So just because the market is trending doesn't mean that the trend is going to last forever. Eventually, momentum slows down and the trend runs out of steam. That's why assessing trend maturity is important. It helps you figure out if there's still room for price to move in your direction or if you're getting in too late. So a couple simple ways that I like to do this is I like to look at RSI on the higher timeframes. So for example, if on the 4-hour or daily, it's at extremely overbought or oversold, then the trend might reverse soon. Some traders like to use divergence as a signal for reversals. I might also look for any chart patterns like double tops and double bottoms, head and shoulders, and I also watch out for breaks of structure. So when an uptrend stops making higher highs and starts forming lower highs instead, that might be a signal that the trend is reversing. So ideally, you want to catch the trends at early or middle stages, not when they're running out of steam. So that's why assessing trend maturity is very important. It helps you figure out if there's still room for price to move in your direction or if you're getting in too late. If you see a couple of these things happening, that might be a good sign that the trend is maturing or reversing. So step 4 is finding high probability entries. So now that you've got a bias and you understand the market's story, it's time to find high probability entries. So some tools that I like to use for entries could be support and resistance, moving averages, trend lines, Fibonacci retracement levels, especially the 38.2%. And I might also use chart patterns. So flags, pennants, triangles, wedges, double tops and double bottoms, head and shoulders. But for me, the important thing is entries are about stacking confluence. So think of like building a bridge. If you try to walk across with just one plank, it's shaky and risky. But when you layer multiple planks together, the bridge becomes solid and reliable. That's what confluences do for your trades. The more reasons I have to take a trade, the better. So I look for at least 3 confluences before taking a trade. For example, price rejecting a key level, bouncing off a moving average, and lining up with a key Fibonacci level. Now that's a solid setup. If there aren't at least 3 confluences, then I wait. The more confluences that you have, you're stacking the odds in your favor and there's more chances that your trade might play out. So step 5 is waiting for confirmation. So now that you've got everything lined up, you know where your entry is, you've got your bias. Before I enter, I always wait for confirmation. So confirmation could come from a rejection candle, engulfing pattern, or if you guys like to trade with volume, it could be where volume starts to kick in. This helps me avoid jumping into early, and it keeps me aligned with real price action, what's happening in the market right now. So the final step is manage risk and keep it simple. I always try to risk less than 1% per trade, especially with prop firms where their daily loss limits are tight and they have strict risk rules. I only take 1 trade at a time. This keeps things simple and reduces stress. And I usually aim for at least a 1 to 3 risk to reward or a 1 to 2 at a minimum, depending on the setup. That way you don't have to win every single trade in order to be profitable. For my stop loss and take profit, I usually place my stop loss just beyond the recent swing high or low, depending on the direction. I just need to have enough room for the trade to breathe. My take profit is always set before a major support or resistance zone, so I'm exiting before the market stalls. So once I set my take profit and stop loss, I leave it alone. No moving stops, no trailing, no micromanaging. I've tested hundreds of variations over the years, using trailing stops, moving to break even, adding into my winning trades. But what's worked best for me is just setting it and forgetting it. It keeps me calm, detached, and focused on the bigger picture. If you want to see how this trading strategy stacks up with others, you can check out my video here where I share the best and worst trading strategies to use with prop firms, and you'll know exactly which ones are worth your time. If you're taking a new challenge soon, you'll also find some prop firm discount codes below. If you're still watching this video and you want to learn a bit more about my trading strategy and how to actually pass prop firm challenges and get consistent payouts, you can check out my mentorship below. I really hope this video helps, and leave a comment below if you have any questions. I'll try my best to get back to you. Thanks so much for watching, and I'll see you guys in the next video.